Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the chart. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will move to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that at the moment the market is rejecting to the upside a quite strong historical structure level for this market. In fact, this zone was acting as previous monthly support here, again support here, again here. The market respected it here as support and broke below the level, broke back above, and at the moment it just tested the zone, rejected it to the upside, and is currently still rejecting the support to the upside. So more bullish price action could be expected away from this area, as the market has already created in the past. Now, if we go down on the weekly time frame, what do we see? Now, from a weekly perspective, the situation is a bit different, because even though we know that the market is rejecting to the upside and is rejecting very strong weekly demand, as we can see here, in fact, the market had created this wick, which was a clear sign that at this area the market had found support, and after another test of that same support, we could expect a rejection to the upside, which is in fact exactly what the market did. Even though we see this anyway, we must acknowledge how the market at the moment is testing the previous high. And as we know, in the market, a previous high is always an area of resistance from which there is the possibility to see short-term weakness, meaning that there is the possibility to see some short-term bearish price action away from that zone, before then getting a potential rejection to the upside and for the market to continue higher. Now, if we go down on the daily time frame, what do we see? From a daily perspective, we can see that in a situation like this, the structure is quite clear. We do have quite strong previous daily resistance here, again resistance here, which the market has now broken to the upside. Now, this means that all this previous resistance is now turned support here. So there is the possibility for the market to try to reject this area to the upside. We can also notice that since we have an impulse and at the moment the market is providing a correction, if we want to measure this correction after the impulse, we have to take our Fibonacci from the low to the high of the impulse leg itself. And what this shows is that we have a 0.32 and 50% retracements lining up perfectly with this previous resistance turn support, creating a confluence of support at this area, which we could expect this market to try to reject to the upside, essentially for the potential completion of this daily impulse correction and impulse pattern to the upside. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the big players essentially in the market are doing, and we check the data precisely for the euro, the first thing that we have to keep in mind is that if we're looking at the data for the euro, we are actually looking at EURUSD, because all currencies on the spot are traded against the USD. So if you're checking the data for the euro, you are already checking EURUSD. And what we can see is that with the last reports, net positions have been increased. We went from having 139k net positions up to having 144k net positions, showing a strong increase of the net positioning, which makes the euro stronger, meaning that it makes EURUSD stronger. Now, this increases the probabilities that from here we could see a potential rejection to the upside. So how we could be approaching this potential move to the upside? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries. At that point, we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the web market breakdowns with the Telegram signals, the COT data software, which is the one precisely that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower, you will see that at the moment there is a massive special promotion in which you can get completely free access to the mentorship program with very easy 3 steps. So I really suggest that you go and check it out, at least at transparentfxtrading.com, and I will see you in it. If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.